Hi there folks, I hope all of you are doing well and had a good weekend. For today's EdgebyRS Academy session, I will be covering the week of 1st April 2024. Now, before I proceed, I do have a bad throat, which means I may pause this recording periodically, so please excuse me for that. Back to business, I will be covering few important topics, right? Of course, there will be basics, which is the gap rules that you are familiar with, but I will be talking about certain nuances, which I don't recall having shared earlier. I'll be talking about balance rules. Now, yes, we know the standard balance rules, and those are fade the edges of the balance, and upon breakout and retest, join the trend. So that's your basic balance rules. However, today I'm going to talk about under what conditions you can look to avoid the balance rules, because certain patterns might take precedence. Third, I'm going to talk about spike rules, very, very important. We haven't really had the opportunity to discuss that before. So I'll take this recording to do so. And of course, there's going to be a lot more apart from what's on top of my mind at this moment. Okay, so let's get to it. Let me switch to... All right, so let's give you a quick backdrop first. Let's go back to the plan of 25th March, that is, right? I clearly shared my anticipation then. We view 50 to 36, 50 to 58 as an important zone for this current leg up, and one that gets tested this week, including the single prints at 50 to 67.71. That's because, so I'm even explaining you why. That's because of the major confluence present in form of structure, context, and being the point of the most recent breakout seen post FOMC release. So now you know exactly why I'm anticipating a backtest. Now let's go to the plan, to the most recent plan, which is the 1st April weekly plan, and right there I state that the developing coil, which is because we had an inside week during the week of 25th March, the developing coil will need to find exploration higher early on, or else sellers will attempt a 42 to 54 point break lower. So the message is consistent. A 54 point break lower is essentially taking ES down to the same 52, 36, 58, and it's the same zone that I stated would get retested. Of course, it happened a week later, but that was the pattern, that was the vision that we had. So with that vision in mind, I shared on the profile chart, a look above and fail is equal to short. Your zone is 53.21, 53.27. Why did I pick this zone? Pretty straightforward. That's the upper distribution of the prior week, plus it was the inside week top. Now, as traders, we always have two options. That is, either it's a breakout or it's going to be a look above and fail. Now, why did I choose a look above and fail and not tell you, guys, if it's a breakout, just go with the break? There's a reason for it, why I tell you to observe for a look above and fail. One, with London being off, now this is the most important part I'm teaching you guys, something that I have spoken about in Discord, but very, very limited in terms of context and its importance. So again, this recording is an opportunity for me to dive a little further. So with London being off, it is absolutely rare that ES will continue to break out. Okay, breakouts are rare. Now, that's the nuance of knowing that London is off. Now, please do note, it's London being off doesn't matter if Germany is open or Germany is closed. It makes zero difference. It's all about London. Of course, this bank holiday, being Easter, even the entire Europe was off. But otherwise, moving forward, we have, I think, up until August, that is, we have at least one bank holiday every month, give or take, which gives us another 4 or 5 bank holidays ahead of us. Of course, I don't have the calendar with me, and you can just look it up online, but that is what we are looking at, another 4 to 5 bank holidays. The nuance behind this bank holidays are simple, that when London is off, any sort of extreme move retraces, right? So just remember, when London is off, if you do see any sort of extreme move, that will retrace back. And the second piece of information is that why I said look above and fail is the short is because on Friday, which is the Good Friday, we had the PCE release. And if I recall correctly, I'm not sure if it was a Friday or a Saturday, Sunday when Powell spoke. And again, those were two catalysts or events that could drive markets, but because it was a Good Friday, we were shut, so nothing there. So Monday or Sunday, Globex was very, very important to see if whatever data release we had, is there any significant response during Sunday, Globex Monday. And as you see, we had a textbook push up, couldn't hold, and as we got into US pre-market, which is the first real session, because why I say that real session, because London was closed, so there was nothing to track there, and we had a perfect look above and one that failed right into US pre-market, US RTH. Now as soon as this failure happened, your first thought should have been, okay, RS has shared in his plans twice already that we are likely back testing the FOMC breakout. Now this is the very nature, this is the pattern around markets where any event driven breakout will retrace. Now when I use these words will retrace, please don't consider them as 100%. Just take anything I say as 80 to 90%. Now, why do we expect a retrace is because this event, the FOMC, wasn't a game-changing event. The underlying did not change. We essentially had a breakout, that breakout retraced. It's very rare that an event-led breakout does not retrace. And understand, when those breakouts don't retrace, those events are extremely critical in form of change of character. We had that at 44.94 CPI breakout. In fact, we left behind a double gap there. It was a gap up, so we had gap, double gap, and it was because the CPI, the data started changing in character. But now with FOMC, no character change. It's the same bread and butter every single month. Same with CPI, by the way. So as we get into this week, the same teachings are going to be useful to you, along with my commentary if you're in Discord, along with my live commentary. And if you are just my student of the EdgebyRS Academy, then yes, again, the same concept will be at play. So what we know is the FOMC was anticipated to be retraced. We were looking for that flush. We needed that look above and fail, which we got, and we activated that entire flush lower down exactly to the base of the FOMC breakout. So if you just quickly look at the profile chart, this was the basing before we saw the FOMC led breakout. And this basing was above or at around the upper distribution from Tuesday's profile, which is Tuesday the 19th March. So if you look at my weekly plan, I have been talking about, or my daily plans that is, I've been talking about this upper distribution being very, very critical, which is 52.24, 52.44, because that is the launch pad, in other words, of this FOMC breakout that was seen. And as you can see, we retraced that entire breakout to the tick, found support, which was anticipated, by the way. And if that was anticipated, if you look at my chart, it was very clear. Buyers attempt a defense to hold the balance or FOMC breakout. Look at the other chart. I had a gray zone. For those at Discord, of course, you know it, and not other. If you're not, then again, here's a screenshot with all the trades we took. So gray zone at 52.36 doing the trick. So we had a zone here because I anticipated there would be support, and we found support to gradually retrace the entire, not entire, let's say 80% of the London break lower. So now we had two distinct patterns at play. The first is the retrace of a FOMC breakout. So once you had the FOMC breakout complete, the retrace of the FOMC breakout complete, the next one was the retrace of the London-led sell-off. Why do I say London-led? Because on Monday, London was off, and on Tuesday, when everyone came online, it continued to flush lower. So two distinct patterns, very, very important. Again, a lot of traders would have lost their minds as to what is happening, but honestly, guys, there was nothing out of the textbook. If you understand the character, if you understand the patterns, then all we did is first retrace FOMC, second, we got back to retracing London. Now, just bear with me here. So now that London got retraced, let's hold our thoughts. This is when majority would be like, okay, bullish. But remind yourself, guys, we have NFP ahead of us. No way we are breaking out ahead of the event, right? This is what I've taught you all throughout all my recordings. Keep events in mind and remember, we are not breaking out of any balance until then. It is supremely unlikely. Like, it has to be one-off event for that to actually happen. So at this point, on this recovery, let's call it a V-shaped recovery. On this V-shaped recovery, there's no way you had to be bullish. All you were doing is playing pattern 1, which is FOMC retest, and pattern 2, which is London retest. Now, here's the next trick. And I'll take you to my Twitter, where I actually stated and shared a screenshot from Discord. Again, if you were there with me in Discord, fine. If you were not, but at least have a look at this. Next, this sell, so this is what I updated on 2nd of April. Next, this sell is sponsored by London, okay, sponsored or led by London, which means at some point, US RTH players will want to backtest to join. Now, what sell am I talking about? I'm talking about this sell-off on Tuesday, 2nd April, not the Monday when London was off. It's the Tuesday sell-off, which was led by London. And US RTH players couldn't participate. Whatever the reason for this dump, it was this dump that got us the retrace of the FOMC. And thereafter, we would fill this gap, retrace the London sell-off, and got to the single prints which were left behind on Monday. And when you would clean up those single prints, you could essentially conclude that the bank holiday sell has been retraced, because we've more or less got to near the value area high or the highs of the session on Monday. So, given that entire idea, that pattern, now you observe, now since you're with me here, just think about it, guys. Take a moment. Think about it. The kind of clarity that was present in my mind. We were dealing with 3 events at one point in time. The London sell, the sell-off when London was off, the sell-off that is when London came online on Tuesday, the FOMC retrace, and thereafter playing the London theme back again, which is to retrace not only the London sell, but also retrace up to the point where the move initiated, which was on Monday when London was off. And with that clarity, I then came about and shared with the team, guys, NFP ahead. Now this is what you want to start thinking, right? We've got NFP ahead, which means no breakout. Because if there's a breakout, it's an outlier event, which is fine, right? I cannot predict every event, so that's an outlier. That's the 10%. What about the 90%? The 90% says there's no breakout. If there's no breakout, the upside is capped. If the upside is capped, then all you're looking for is a good fade. Now that fade becomes another 80 or 90% probability trade when it is a gap up on the day. Now this day, which is Thursday, we gapped above 52.82, which was the gap down on Tuesday, because we never filled this gap on on Wednesday, despite pushing higher. We missed it by, I think, 2 points or so, and then flushed lower, back up again. Now, on this back up again, we started to gap up above not only Wednesday's high, but also above Monday's low, which never filled on Wednesday. Right? Stay with me here. So now we've got gap, we've got a double gap right at the same level, 52.82. Now bring back the event, NFP. Breakout is rare, which means we're not going above 53.21. That's the first point. Second point, once we are around about retraced the London bank holiday sell, right this here, we've got to the single prints. You have your resistance, and is why I told members gap rules will be critical this morning. I'd like to attempt my first fade at 53.0408. Why 53.0408? Two reasons. Not only was it the single prints from Monday, but if you look at this profile chart, you will realize of the upper distribution, we had the value area high and the value area low, a very good overlap here, which formed the ultimate zone for us. And thereafter, you can of course see how again the same region came into play on Thursday and subsequently Monday. So with that idea in mind, we took this short at 53.0408, and trust me, had this would this move extend to 53.20s, I would have again taken this short, because gaps always, and when I say always, again 80-90% of the time, fill ahead of the event. The gaps that occur post event, guys, right? If it's a double gap or a gap post event, you treat them very differently because they are led by the event. When there are gaps or double gaps ahead of the event, they are likely to retrace. Of course, broader context is very, very important. And is why we took this short right here with confidence that we would go down and fill the gap. Of course, we got very lucky, to be honest. I did not expect this magnitude on a Thursday. I did not one bit. This move accelerated lower all the way down to 51.90s. And that's because we had certain Fed speakers on the day, and they really got this move to accelerate. Now, I hope so far you guys have followed how London bank holiday, London-led sell-off, which was Tuesday, retrace of the FOMC breakout, retrace of the London sell-off and the London bank holiday move, and then the NFP theme, which brings in the event again, resulted in the drop here. So whatever I am talking, guys, is not hindsight, far from it. It's absolute foresight, because A, not only did I call these trades live in Discord, but at least of the sell-off which you saw on Monday and Tuesday was already shared with you via the weekly plan on 25th March and the 1st April. So everything that I do is already studied ahead of time, and of course Discord gets the live updates from me on my thoughts and what I'm thinking, and Academy truly gets to learn from it as and when time permits. So we got this sell-off right here. Now at this point, guys, right, just ask yourself, we're selling off not 10, 20, 30, 40 points or 100 points ahead of the event. Again, there's no gap ahead of the event, but at the same time, ahead of the NFP, which is another event, we've sold off 100 plus points. Instantly, you want to think about, okay, this is another opportunity. Why? We don't leave behind 80-90% of the time such a poor structure ahead of the event. Seldom happens. Seldom. And if it is happening, you know it is a potential long into the weekend. Now, don't take my word for it. I explain it to you. Exhaustion. 51.92.5204. Now let me just first, before I talk to you about how I identified this exhaustion, this is the game of awareness, right? Trading is all about awareness. How good you are in remembering things determines how well you do in the moment, right? Now just look at this. Remember, this is the upper distribution we've been talking about. FOMC launch pad, breakout, etc. We wanted a backtest, we got it. But guys, now bring in the balance rules, right? Just forget the anchor balance for now. Just skip it for now. Stay with me here. What do the balance rules suggest? If the top is rejected, the upper distribution is rejected, likely ES will rotate to the bottom. Right? We went from the upper distribution to the lower distribution. And what's the bottom of the lower distribution? 51.94. And where did we find the bottom on Thursday? Exactly at 51.94, leaving behind a weak low. But that is for this week and the week after that maybe. But for now, we rotated exactly to the bottom. So that's the first set of information you already had in respect to this being an important zone. Now a lot of traders, sorry, just a second guys. A lot of traders at this point, after this emotional sell-off, would have been like, done, we are breaking down lower and it's going lower. Not me. Not once. That's what I always say. Not me, not once. Why? Because one, we just completed the double distribution day, which is Tuesday, 19th March, the retrace of that, fine. And that is fair because we broke the upper distribution, which meant we'd go down all the way to the bottom of the lower distribution. So we got that. Now, let's bring in another thing which I've not ever shared with you guys before, is my custom exhaustion ranges, okay? Now these exhaustions work both to the upside and downside. So if you take from the highs of the session and you pull down 108 points, it takes you to 5,200. Pull up 117 points, it takes you to 5191. So 108 and 117 point extension is my custom range that I always follow, and I always pull them from extreme ends. Of course, I can't tell you just based on today, based on this given session on Thursday, I pulled it up from session highs, which made sense, but probably some other day it would be off EU high or a EU low. It all depends on the day's structure and context from where I pull this. So it's a bit of a discretionary tool, you may want to say, but again, one that is very effective. In this case, we had it, I called for it, and there you go. We did not only hit the bottom, sorry, we did not only trade down to the lower distribution of Tuesday, 19th March, March's double distribution day, but we also resulted in a exhaustion, a custom exhaustion, which has nothing to do with those double distributions or anything at all, right? But it all lined up at the same level. That's the first. Second point around ahead of NFP. Now, of course, again, I called this thing real time on Discord, where 30 minutes before the close, I said, all right, guys, we've dropped 104 points off session highs, typically indicative of exhaustion based on my 108,117. I gave the range, and I've also said we've completed the 100% extension of the inside week, right? So we completed those extensions, which came about, and that's when we knew that we've hit 3 parameters now, which suggest this zone is very important. Now, guys, it's just not this all, right? These are 3 good elements. Let me blow your mind off now. I'm very bad with Sierra. Just a moment, please. Yeah, there you go. Okay, so why else did I say that that's the exhaustion? Why else did I want to go long there? Is because it's the H contract high exactly at 51.94. Now, take a step back. Go check out 8th March, H contract. That was the NFP release day. Now, ahead of the event, unlikely ES is going to break below 51.94, and place itself inside of March NFP range. If it did at all, it would mean that NFP will be the sell the news event. The fact they came here towards the end of day, they held it, and all they did was just repair, retest, backfill this entire region, this structure here by holding 5194 was the signal to me that NFP is going to be a rally on release. And because I had those thoughts, just a second, guys. Right, so this is Discord where I wrote ahead of the NFP 10 minutes, 11 minutes before the NFP that now I do see downside being limited after a 144 point drop this week, plus CPI due next. So that's fueling my idea to attempt a long on the drop. And your pivot, of course, I adjusted the pivot from 51.94 5204. I adjusted it to 51.8397. That said, this is going to be your key interest, and upside are those singles 5230s and FOMC Launchpad and the upper distribution at 5244. So I was very clear I wanted to be long NFP. It was into my exhaustion, and look what happens. NFP release hits right into 5195, and there you go. We started the move higher to retrace, if not all, most of the single prints that were left behind on Thursday. So that's how we got an event, we got an exhaustion, we got in that lower distribution, we used the 5194 of the H contract swing high, we used that day. If we are holding above the prior NFP range, it is bullish into the event. More so, now let's apply the spike rules, right? Very straightforward. Again, guys, everything that I'm teaching you here right now is not only based on events or exhaustion. I'm also using things like spike rules, gap rules, etc., balance rules, all to guide you, right? Because as you learn the advanced topics, at least the basic things like spike, gap, and balance should still be able to guide you, irrespective of you being a master of these advanced concepts. So there we go. Nice little defense at 5190s. But look at this. What's the spike base? Spike base is 5204. And what are the spike rules? Very simple. Spike base is holding. In this case, of course, it's a spike down. So spike base is holding from above. You want to be long because, as per spike rules, holding above base in this case means Thursday's late day sell-off is being rejected. That is what spike rules essentially mean. They validate the end of day move, which could be higher or lower, by applying the spike rules. Now, because we have the contextual understanding and we know the patterns that breaks seldom occur ahead of the event, and the fact we held the NFP session highs from 8th March, we held the H contract swing high, then it all pointed to long on release. Now, whether you took this zone, whether you used spike base to get on, and thereafter you can see how we started forming higher lows. Look at this right here, period A, breakout above NFP high, correct? Release high when I say that, NFP release high, and then you've got period B, which retraces about 50%. Again, that's the second clue that we observe. Sorry, that was a long pause. So, period B retraces 50% of period A, holding the release range top again, and there you go, the continuation occurs. Now there you go, higher lows continuously on 30 minutes, one time framing higher. There's no reason for you to be bearish. Absolutely zero. And the reason is twofold. Not only do we have the event trade strategy in play, but again, let's go back to that upper and lower distribution. We are back above the lower distribution top, which is 5219. There you go. So since we are holding 5219, we've got single prints above. We are all talking about a rotation to clean up this poor structure. Emotional selling. Again, I did note to my members on the 4th, which is Thursday again, look at the single prints being left behind. Think emotional selling. And whenever I use these terms, emotional selling, it means at some point I'm anticipating a retrace. And of course, if I give you a zone such as the exhaustion, etc., then of course you can participate for the repair of these partial fills. So guys, in summary, I have taken you through the importance of London Bank Holiday, then the London sell-off, two different elements. Then I spoke about the event retrace, which is the FOMC. Then we spoke about the London sell-off retrace. Then we spoke about London bank holiday retrace. Then we spoke about the NFP, how we don't leave gaps behind, how we cannot break, how we are unlikely to break out ahead of the event, whether it's NFP, CPI, FOMC, whatever event that may be, and how knowing that this gap was a realistic target. Of course, for swing traders, let me just tell you, by the way, this sell-off isn't entirely unexpected. I did anticipate it, just a second, where I did tell you guys all immediate signs point to an overextension and a backtest of 5150s and 60s being due. I still stand by it broadly, okay? Even if there's a breakout, I don't know, but I'm standing by it, it's coming. We may want to wait for certain MGI, some sort of confirmation, right? And probably by Tuesday end of day or Wednesday London session, I may exactly have a hint of where we are standing in terms of the revisit timeline to 5160s, 5150s. But that said, we still just fell short by 30 points. We still came down to 5190. So anyone who positioned for a swing, anyone who positioned for a swing right off the bat at these highs right here, hasn't been disappointed, because yes, we did not meet my end target, but we still got about 70% of what was anticipated. So again, I've explained these here, the notes are here, the charts are with you. Pause the recording, observe these notes, take a screenshot so you will understand them better. Now that you understand the entire pattern, this was a more macro view of everything I gave you along with some teachings. Now let me just quickly talk about small nuances that came through during the week, right, which will be very, very important, which is outside of the patterns, but something that will be more useful day to day, session to session. All right, so just certain nuances quickly. On 1st April, and second, which is 1st April overnight session, 2nd April, 2nd April overnight session, we had confirmation. Now you see, I did share with you momentum shift will be found here. Whenever I talk about momentum shift, it is some sort of directional change. Now, there are certain facets to change of trends and direction. First is momentum changes, then direction changes, then there are reversals, there are exhaustions, which I will be covering in detail. But to begin with, momentum shift is where at 52.89, 52.94. And there you go, this zone. And we had the confirmation momentum is shifting. How did we have that confirmation? The list framework. That's the most basic tool in your arsenal. You guys know about it. List framework confirmed. That is it. It is a short. And at this point, we still had the FOMC retrace pending. So you always knew that if you missed it here, this was your second opportunity to get it. Now, the list framework is excellent. But when tempo is slow, when time needs to be killed, because you see markets sometimes tend to spend time instead of moving very quickly, and something I'm sure you saw during the week of 25th March. Now, when time is being spent, then you want to think about it in session format. So break down your sessions. How many sessions do we have, guys? We have US RTH, and US RTH is split into two sessions, which is pre-London, which is US RTH during London, and then US RTH post-London. Then you have Globex session, which is split into two again, which is Asia session and London session. And of course, just 1 hour ahead of the London session, you have the London pre-market, which is that 1 hour pre-market. US pre-market is 90 minutes. And after the London session, you then get into that window of US pre-market, which is 90 minutes ahead of the US Open. So in total, guys, you are talking about one, which is US pre-market, US RTH split into two, that's 3 sessions, Asia, London pre-market, London. So you're talking about 6 or 7 sessions in total. So split them into sessions. And now what do we observe? 3 consecutive sessions, list framework intact, 3 sessions consecutively holding below around the momentum shift zone. It is now obvious that we are all set to flush lower. And there you go, my note of 42 to 54 points. Sell should be an instant recall when you see an action of this sort. And of course, we flushed lower. Now, heading into Tuesday, we had a gap down, great. But we also had an inside week breakdown. We also had a anchor balance breakdown. So we are talking about 3 elements and all 3 favoring sellers. So that means we have gap, inside week, anchor balance breakdown, which means you're starting your session with gap and balance rules. And at that time, of course, we shorted at 52.52. Now, at that point, I did not think about an inventory correction. The reason is very simple, because there are 3x sellers in control. And also, we were looking for the base to back test, which is 36.40. So we had good 10-15 points to capture when at the time we then explode along. Now, gap rules. Guys, gap rules is very, very straightforward, right? It may need certain practice. I'm not ruling that out. It will need screen time. It will need some practice. But gap rules are simple. The opening level of the RTH session is very important because we use that opening level as a pivot. If we are above the open, so let's say it's a gap down. So if we are above the open, it's an inventory correction to the upside. And if we hold below the open, then it is gap and go. Vice versa, if it is a gap up, then of course holding above the open is gap and go, and holding below the open is an inventory correction. Now that is your basics. Let's dive into certain nuances. When this gap does appear, first question you want to ask yourself before taking a trade: if I go with the gap, and now I'm going to be referring to this gap down, okay? So if I go short, which is following the open, so I'm doing a gap and go. So if you are executing a gap and go, the first question you must ask yourself is, where is the nearest support, right? It could be a strong support, it could be a weak support, but where is the next important reference or support? For me personally, that stood at 36. And I've already explained you the reason why. Now that it stood at 36, I knew instantly my first trade is a short down to 36. I exit that trade at 36, or at least I take my majority of my position off at 36, hold on to my runners, and start looking for potential longs. Why? Because we are at support. Gap and go into support, right? Now, why I took this trade despite it being into support is because I had a good 15-point margin of safety, which is enough room for ES to travel, and even if it didn't get to 36, it got to 40, I would have still made my 10-12 points. Now that we are back into that support region, I want to start looking at, okay, it is a gap and go. So IB period becomes very, very important. Now, why is IB period important? When it's a gap and go or a balance breakdown or spike rules or any rules for that matter, not any, there are actually only these three that we follow. So when we have that gap rules in play and IB period, the IB period are the first 60 minutes when market participants and initiative market participants can accelerate. So in this case, it's a gap down. So we are talking about initiative sellers. So initiative sellers have this 60 minutes to inflict as much pain and damage as they can. But as we get through these 60 minutes, the tempo is missing. Things have slowed down. The magnitude is mere 15 points or 20. Then you know probably these sellers are tired. Now, why are these sellers tired, guys? Context, right? The sellers are tired because they've been selling since Monday, Tuesday. That's 2 days in a row of selling in a bullish market, right? I don't care what sentiment is. Fact is, this is still bullish. Even after all this, it's bullish because we are holding key levels like 50/50s or the prior all-time highs. We are holding all those key levels and more. Why am I bearish, right? Then it's mere reversals, exhaustions, just the standard pullback and so on and so forth. So anyways, coming back, the IB period couldn't accelerate. Now that is when it's hit the zone. IB period is done. I have the IB rules, which is essentially the balance rules, guiding me. At the same time, sellers could have pushed at least 20-25 points, but they couldn't. Now, it also matters how wide is the gap. In this case, the gap was already about 50 odd, what's the high? 55. About 27 points, and then you had a move down all the way. So just think about it. We've already hit 46 points. Done. There has to be an attempt to correct the inventory. There has to be an attempt to look back above usual conditions. And there you go. IB got done. And there you go. We explored along here. Like I said, at 50 to 36, that was a zone. And eventually we got that inventory correction. So the importance of gap plus IB, same thing. Just let's come back here to spike rules. Same thing, right? Spike 5204. In spike, I told you already with spike rules, the opening level is important. So what's the opening level here? The open is at 5211. All what we are watching for is, are we holding above 5211? Yes, then we are talking about an inventory correction. No, we're talking about potentially going back lower. Now in this case, we are holding above spike. So just form this staircase idea in your mind. Exhaustion is holding, which is the bottom of the lower distribution from Tuesday 19th March, right? That's that. Then we are holding the swing high from H contract. Okay. Now we are also holding the Asia low. Okay. We are holding the NFP release range low. Okay. You see the keyword release range. Okay, not session, release range. The session high of NFP is somewhere here now at 50 to 72. But the release range is this 30-minute bar. And there you go, 50 to 11 holding. And that's when you start thinking, okay, this is a long because we're holding above. And it continues with all other staircase supports forming period B, period A retrace, etc. And NFP, IB breakout, etc. that moves on. That ultimately tells you that this is moving higher. Again, look at the IB period here. IB period is not in favor of sellers, which should be the case because we ended in spike down. In fact, they kept pushing higher from day one. So it's the same idea of gap rules, the open, spike rules, the open, and then the use of IB period to know which side might be tired. So in this case, when we are observing the spike, it's a spike down, which means holding above is a clear inventory correction. In this case, repairing the single prints here or the poor structure. Okay guys, so this is your spike, this is your gap, these are your rules. 3x seller control, always remember those. Again, last bit here on Wednesday, look at this, we start forming higher lows. That's the first thing to notice. The second thing that you want to notice on Wednesday is that again 52.44, which is the upper distribution, again from that same Tuesday that we've been talking about. Again, that is holding, which means buyers continue to be in control despite being under the anchor balance and inside week. Now this is when, guys, you want to understand when to follow the balance rules and when not to, right? This is a nuance, this is a subtle nuance, and the reason is because we were in the middle of those patterns that I spoke about, which is London holiday, London bank holiday, London sell-off, FOMC retrace, and the retrace of this. So we skipped this and we started looking at these. But as we move into this week now, post CPI, post the ECB, I think then these balances start to become more and more important because now we are through that noisy period. Okay, again, read these notes, pretty self-explanatory, and everything else that I've put here to help you. Again, a screenshot of this if you like. Again, same thing, all notes were shared with you ahead of time. So this is how, guys, you want to treat markets. They are a puzzle. You want to put everything together, and the weekly plan helps you put it together. My Discord commentary helps you put it together, and of course, I'm calling trades out for you live. Now, again, it's too early for me to predict what CPI might look like, and especially when we've got ECB the following day. So it's a bit of a, a mess there because we've got two back-to-back events. If it was CPI and FOMC, a bit predictable, but ECB is always a different event because it's European. Nevertheless, again, I think this week it's the same story. That is, we'll have the same 36 being important. We'll have this same. So what I did for just this week, I've just adjusted the balance, right? I've taken it to 36 and I've drawn a line at 47, right? So what I'm broadly saying is if we keep holding this P top, which is a merged profile P top, by the way, not your typical P top, merged profile P top, if we continue to hold this 47, 36, which is the FOMC basing the upper distribution here, if we broadly just hold this region from above, not from under, right? From above, heading into CPI, we are likely to see a break first. Again, please don't hold me to this yet, because like I said, I like to see what how Tuesday ends, and I also want to see what Wednesday London session is doing ahead of the CPI to truly get that clarity as to what to anticipate. But broadly, I still believe this 36-47 region, this area, this upper distribution here, this is the region which is very, very important. And on any back test that you see post-event or IB back test, right? Similar to what we saw with NFP, with the IB thereafter, as long as we get something very similar, I think there is merit to remain long or hold that long bias. And another reason for that is because I don't know if in the next 2 days we'll clean up these singles, but then if not so, these are still magnets. And look at the highs. We formed these new highs during ETH, which means we're still pending a RTH test of this, or a RTH new all-time high. Plus, we also do not have any excess at the top here. So given the lack of excess at 5320s and the cluster that is there, I still think we can go up. But again, like I said, this is your key region. Don't think too far out. Let this region dictate. And again, wait for my commentary on Discord. Wednesday, you will have it. You know, I always publish a CPI plan. So I will have clarity, but at least mentally for you to prepare, visualize, understand how these moves work, understand where is the H contract CPI range, okay? That's very, very important for you to consider. I don't recall the date, so you may have to go back. But H contract, CPI, session high, session low will also be very, very important. Okay. So I'll leave you with this. I hope this was helpful. All these notes are extremely, extremely critical. Keep them in mind, and I will see you next week. Good luck. And if you have any questions, drop me an email. You can send me a DM on Twitter. If you're on Discord, then a Discord DM. I'm sorry this is the longest 50-minute session, but again, new concepts were released. Again, I do these recordings only once a week, so 10 minutes per day is all you may want to think of these sessions as. Okay, take care, and I'll see you next week. Bye bye.